Welcome back, everybody. This is a new weekly recap, and I'm going to be covering a few things in the updates moving forward for this kind of weekly series here. But I want to quickly go over this gold trade that we had from last week. It was a pretty good trade. It didn't pay out in full. It didn't, achieve a crazy amount of pips the way we typically do. But last week we really didn't do any trading at all. There were only 3 trades we took. The 2 currency trades hit stop loss, which is perfectly fine. Going to the 4th quarter of the year, we're not going to see too much action. It's going to be a lot of sideways trending for the US pairs, simply because the 4th quarter of every trading year is always very slow. It's very spotty. But this trade was very simple, very easy execution. This is the kind of trades we look for. We like to look for key zone areas or key areas of support or resistance that actually cross over with the trends. So in this case, we had an area of former resistance, new support, crossing over with an upwards trend. If you guys do see the MAs on the screen, these are simply for my personal trading strategy. They're not something that we really touch base on when it comes to our actual programming. And if you guys are looking into any indicators, feel free to message me. I do have quite a bit of knowledge when it comes to certain indicators like Fibonacci, moving averages, RSI, those type of things. So if you guys have any questions, you can always feel free to message me. It's not something we really touch base on in the programs because we are price action traders at the end of the day. But indicators are always something that are nice to have when they actually work with your trading strategies. So again, actually going into the markup, we have a key zone area here inside the 1830, 1825 range. This is the key zone break above former resistance, new support. So we had the market break above the former resistance, going on a nice uptrend. Now this uptrend wasn't too steep, to say the least, because the market is pushing at such a high rate after the gold crash. The market is trying to correct itself, so it's quite a steep trend, but it's not a very steep trend to where it's like very spotty. It's very iffy. Now the market did retest twice, so it had a retest. Market broke back below, respected the moving average. Again, I'm just going to be covering the moving average in this video because it's on the screen and it did play a role. But again, we are price action traders at the end of the day. So market did bounce off of the MA twice, touched base over the EMA, which is the exponential moving average. But the MA was the leading factor for this trade. So it touched twice, retested once more, had an area of consolidation. You could even add that this is a nice little market structure in itself. Market broke above, played a little bit above, peaking at 1842, 1843 before retesting once more. Now the reason I had the actual entry price under the trend line and inside the middle of the actual key zone is because I wanted to get in under the actual trend. I didn't want to play, you don't ever want to place your entry at the trend itself, either below to catch the wick or above if you don't think it's going to retest directly. So you never want to have it directly on the trend line. That's just asking for the trade to miss. Now, actually going into the trade itself, we had a 50 pip stop loss, which was not a big deal. I didn't want to have it too wide. As you can see, the market did almost spike the stop loss. So we're going to actually check how far. I think it came within 2 or 3 pips. So from the actual entry, market came down to about 44 pips. So from the actual stop loss itself, yeah, I'm gonna say it's about 6 pips. So 45 pips, dodged the stop loss barely. I know a couple of you guys may have gotten stopped out. Did tell you guys to re-enter, and you guys were actually in more profit than we took. But again, price didn't hit the stop loss, which is what we wanted. Price dodged the stop loss, came right back up and closed as a wick. So that's a perfect execution in my books. Now going into the actual trade pushed up immediately into profit, peaked at the 1842 price before reversing back below. Overall peaked directly to the actual trend itself at about 1848.1. So we are having a little bit of trouble with gold breaking back above the 1850 range. If we were to look at the gold market itself right now, we are in a very low point. I would like to see gold touch the 1900 range again before the end of the year. But if we look at the overall gold market itself, we are on a nice little downtrend. So we would end up seeing gold hit the 1873-74 range. The 1738-1734 range, if gold doesn't close above 1900 by the end of the year. Now the reason for that is the overall trend of gold right now is a downtrend, like I mentioned earlier, and if we were to open up the chart, there is no key area of support until you hit the 1760 range. This range right here that I have marked up is the actual current target for a key level on gold right now. So looking forward and touching base on what I said again, gold is on a heavy downtrend. If it doesn't close above 1900 before the end of the year, we are not going to see gold touching that range for a while. So right now, you can expect gold to touch 1760, which is what I'm actually going to mark down in my notebook right now. So 1760 is the target. I will be looking for another sell come Monday on gold. I'm not going to be looking for buys anymore because I don't think the 1900 range is where we're going to get by the end of the year. Again, I hope it hits that point in the year, but right now we're having a struggle. We're having a problem hitting 1850 after the gold crash. So I keep rambling on, but moving on to the actual point of this video, aside from the gold trade itself, I'm going to be switching up things for a little bit here. This will be the last recap for the weekly recaps of the actual signals because we are going into the fourth quarter of the year. Like I mentioned at the beginning of the video, it's getting very, very slow. We're not going to see too much market activity until I'm going to say mid-January, early February. That's when the first quarter of the year is going to start, and that's when the markets start rolling again. So moving forward from this week on, I'm going to be releasing tip videos. By that, I mean, little things here and there that I wish I personally had and Carlos wished he personally had going into actually beginning your trading journey. So as you guys know, the Remastered Signals is also a complimentary introductory course to Forex. Now we do have the Mastermind 2.0, but that is actually the introductory to the Market Maker Masterclass. That was the plan from the start, and we needed an actual introductory course to give people, a program that will introduce them to the very basics and take them a little bit further into actually developing a trading strategy and correct risk management at the start. We want to throw risk management in your face at the start. We want to throw it right in your face, something you can avoid, and we want to give you guys something of value for a lower cost, which would be the 100 monthly for the signals on top of the introductory program. So with that said, I want to give you guys weekly videos that you guys can implement even if you're an advanced trader and you need to get back to the basics. We're going to give you guys weekly tip and weekly management videos is what I'm going to say. So the first video I have in mind is how to correctly backtest. Now backtesting is something that I hear thrown around a lot, and I've been doing myself recently, not throwing it around a lot, but I've been recently backtesting quite a bit for a new strategy I'm personally working on. It's going to be a day trading strategy / scalping strategy. So it's, I'm in the markets for 2 sessions specifically. Once the sessions are done, I'm out of the trades. The trades are closed. So I'm going to be throwing you guys a backtesting video next week. It's going to be how to properly backtest and how to do so effectively, because people just go on the charts. I'll open up a chart right now. Let's open up GBP/USD, and they'll look at the chart right here and they'll go, okay, so area of support, place this right here like that, boom, and then we look for an uptrend, boom, uptrend right there, a little bit of break below, and they'll go, okay, so I'll have my buy position from here off the support, take profit, and stop loss outside the wick, something like that. And then they'll go, boom, that was a back test. That's not a back test. You want to back test correctly. You want to see, an actual setup as it's developing. You don't want to see the overall outcome. This trade already here has taken place. It's done. That's the trade. You want to look at a chart. You want to see the actual setup taking place. So something like this, but you don't want to see any of the junk from this side moving forward. You don't want to see any of this. You just want to see the setup on the left side of the screen. So I'm going to show you guys how to effectively backtest, how I personally do so. I'm going to let you guys know what I have in my journal as I'm backtesting and how to do it effectively and properly, because again, backtesting is very important for actually developing a constructive strategy, for actually developing an effective strategy, and it's very, very important that it'll shape your trading career moving forward. So going into next week and the weeks coming forward until quarter one, I'm going to be releasing weekly videos that'll help you guys, give you guys tips here and there, give you guys a little bit of look into how I personally prepare for the markets and, trade effectively moving forward. So with that being said, this is going to wrap up this week's update, this weekly recap. This is going to be the final recap until quarter one. But I hope you guys enjoyed. If you guys have any questions, of course, always, I say it all the time, shoot me a message. I'll be happy to help you guys out. And I look forward to you guys seeing the first trading backtest video coming next week. So with that said, again, take care. It's Thomas from FCI. I'll see you guys in the next video.